Mortgage bonds are a common part of many investment portfolios. Let's break down how these securities actually work. In finance, these are usually called mortgage-backed securities, or MBS for short. Think of an MBS as a giant pool of thousands of individual home loans bundled together into one financial product. When homeowners make their monthly payments, that money flows through the bank and eventually reaches the investors who own the bond. Unlike government bonds, mortgage bonds carry extra risk because homeowners can pay off their loans early, which changes your return. The yield on these bonds comes from the interest homeowners pay, but it is sensitive to how fast those loans are being paid off. Always check if the bonds are issued by government agencies, which generally carry lower risk than private label mortgage bonds. Mortgage bonds add complexity to a portfolio. Thanks for watching, and remember to research before you invest.